and you can stay over that line and it's a peak, pay attention to it. That has resulted in the largest moves. So that was a great trading day. Let's just jump right into it because we have a lot to cover. As always, subscribe to the channel, click all notifications because the content here is extremely timely and you want to see it when it comes out. So this is Tesla. Why do I have this up? Well, we're going to start here. First, you had a massive reversal today and you wound up closing right over that anchored VWAP. I'm not a huge anchored VWAP person, but I will say this, that when you can get over that line and you can stay over that line and it's a peak, pay attention to it. That has resulted in the largest moves in Tesla for the year. So closing above that has resulted in the largest moves of Tesla of the year. So it's possible that we're setting up like that again. Now, if you drill down into this and you can just see that you actually took out the low and then you went back over, you actually reversed, which is kind of crazy when you think about it today, because you came in today and you're not breaking down. So you kind of have this wonky bear flag right here, and then you're not breaking it. So we're seeing more of that, and I'll give you another example in a moment, but I can easily see this trading up to that 941.22 level. I think it's just a matter of time. You theoretically should be able to trade. If you break this and you start looking at these other levels like 953 right here, the top of the bear flag right here, which is about 1,000. If you start looking at that, you can easily get to this 1088 level, okay? And that's really what you want to focus on. So you can get up there. Now, if you do get up there, you're still in a downtrend, but you could still get up there. Make sure you stay to the end because I'm going to go through the indexes and explain why today was very different and very powerful. So if you just see my lines already, how we're already set up, this was the line I wanted to see. If you watched yesterday's content, you heard me talk about I owned calls and I was down on those calls coming into it here. Now, what's kind of interesting about that position is that no one's really going to look at this and assume that you're going to do this. Why? We haven't been doing it. So every single time that you're down, you've been making lower lows every single time. So even if you zoom in down here on this uptrend on the 10 days, making a beautiful channel for us. But as that's been going along, we really haven't been just having another day of just where we just reverse. In other words, this is now turning into day one and we're hitting higher highs. That's a little different than what we've been doing, right? Even here, you sell down and then you sell down again, sells down, gaps up, sells down. So this means that we're starting to see more and more buying. And one of the things I was even saying in the trading room today, which was really interesting, you're starting to see the dips get acquired faster. So you're not really pulling back. Even when stocks stop going up, you're seeing inflows into them. And I think that's really important for us to understand and very important for us to look at. So what we're going to do is we're going to see how this flips and we're going to watch it, see if we can get up to that 174.47 level, and then see if we can get up to that 183 level. I do like this long term. I think that this has massive potential. Again, there's a free version of the newsletter below. Just simply click the link to get it. It's free. It comes out 3 times a week and keeps you up to date with actually examples of what goes on in the trading room, as well as information on Monday and a wrap up either Friday or Saturday. So let's just keep on going down here because there's just so much to go over. So Nvidia is another example, and I'm going to leave everything in and zoom in on this for a moment because you can just see how crowded it is here with data. So you got down to that 50-day and then you just reversed, right? If you look at this particular pattern, someone could say, well, it's kind of like a morning star. Kind of, not really, but it kind of is. So then you have that coming across, you're over the 10, you're over anchored VWAP again. And I'm not a huge anchored VWAP guy because you can put them anywhere and then say, okay, see, it's there. I think you have to be very strategic with them when you have peaks and valleys. I think they can offer value because you're basically talking about where everybody is averaged into the price, which is right here. So you broke out of here and maybe you're going to go higher, but I'm not so convinced of this because we're not making that higher high, right? And so I would be a little more apprehensive. And even here, we're not making that higher high. So if you look at the indexes and what happened today, and we'll get into it in greater detail in a moment, we made that higher high. So we could say that they're underperforming, but if I wanted exposure to it and I wanted leverage, I could use this 3X bull ETF fund. And what that did was when we traded down today, we traded back up. Right? And now we're over that wick and now we're pushing. So that's really what I'm looking for. Now, if we get to here, okay, 22.28, you should be able to get above 22.28 and flip to it. And then you should be able to go to 26.30 and go from there. Okay, so I really think that that's something that I need to, really focus on. But you can get over that 22.28 and get to that 26.30 and push. And yes, Nvidia and AMD may move up on that, but it could be something else. Like we saw this today just explode. We just had great earnings. Earnings were here, and then you flip this level, and then you went above it. Now you'll just look excellent. And now look at the volume that's coming in. So anyone's going to be all over that chart now because now you flip that wick, right? Wicks are what? Price rejection. You opened right there. So this wick ties right in with that open on earnings. And now you're above all that. Once you clear these nasty red bars, that's it. It's game on. So this probably continues to push. What you'd like to see is you'd like to see some kind of flag, maybe, if you're fortunate enough, and then push. I don't know what we're going to see here, but I would keep an eye on this. I wouldn't want to buy it if it got overextended. Maybe if we could form some kind of flag and go from there. But this is perfect because you're in the right sector. You're a foundry that's already functioning in the US. They're looking to expand foundry functionality and utilization throughout the entire world because of what's going on with China and the lockdown still. So this makes a lot of sense. And names like this can continue to move. The other one that we already did, we did in the trading room, and it's also in the newsletter. So we actually bought this one around 85, pulled back, and now we're just staying in the trade. But the reason I bring this up is foundries are setting up a little bit better, aren't they? So the foundries, Taiwan Semi, UMC, GFS, I focus on GFS and Taiwan Semi, they're hitting higher highs. AMD, Nvidia, not so much. So that kind of tells you where the inflows of capital are going, right? And maybe that's something that you should consider when you're thinking about buying one of those, buying into that industry. So just something to think about. I mean, other names look good that are in tech. The software names seem to keep moving. You keep seeing this gap up, push, gap up, push. Maybe we're going to get through for Microsoft this 293.30 level. Maybe that's going to happen for us. I would definitely keep it on your radar. I would drill into this a little bit on the weekly so you can get a better snapshot of where exactly we are in the pecking order. And you're sitting right there. So if you can flip this 50 week, it's probably game on. If you can flip that level, that gets you to 294.5. That could get you to that 317, 320 level. So I really like that idea, and it's definitely something for us to consider, to say the least. So we'll take a look at that, and we'll kind of go from there. But there's an inordinate amount to go over, and I just want to focus on some things like this. Like here's DraftKings, and you're curling. And you had a hard time with this 10 week, and now you flipped the 10 week and it's curling up, right? You really don't have anything here until you get to about here, this $26. Now, if you look at this on the daily, this is exactly what I'm talking about. This is what we're seeing so much of. And, patterns replicate during very specific times. If you can start picking up those patterns, you might be able to get a little bit of an edge, right? And that's all we're really trying to do, get an edge. No one knows what's going to happen the next day. You're just trying to position yourself properly in case in case what you think is going to happen. But nobody really knows. So you come down here, you completely engulf this. You could actually argue this is a bearish engulfing because this body engulfs that body. You gap up and you reverse. You are not seeing this happen any time in recent history. If you start going through these charts, it really is not happening, right? You'd trade down and then you'd come back up. Now you're gapping down and people are using it as buying opportunities to get long. This is a very different scenario than what we've been dealing with. And I would suggest that you look at something like this. We're in this a little cheaper. Again, this is in the newsletter and we did it in the trading room. But we're in a little cheaper. We're up about probably over 10% in it right now. But I think you're going to get to the 21, 26. I think you're going to push up to this 25. I think you can get up to this 27, 29, 27, let's call it 28, just to make the math simple. I think it's very realistic. You're going in the football season. People are bored. And when you're in recessionary times, there's two things that work in recessionary times: movies, Hollywood, and gambling. If you ever look at the times that they boomed, it was in recessionary or depression times. They actually grew. People just want an escape. So keep that in mind. There are other names that are on the radar in software, but those kinds of names they're not really breaking out just yet. I would focus on something like this. It did this exact pattern. Gaps down, so you think it's over, and then just gaps up the next day and goes. Now we're hitting higher highs. Now you're above that 28.50. If you went here and you looked at next level where you could have that resistance, it's 30.55. Flip 30.55 and push. Now I'm at 32.02. That's what you want to see, okay? That's really what we're looking for. So I'm focused on that. I'm focused on names like this, beating earnings, raising guidance, explaining your story properly. Companies like LMND, that's exactly what they're doing. And I really think that that's very powerful. And I do think that they're the kinds of names that you need to be focusing on. So there's some other sectors out there that are just rocking and rolling. And I just want to go over this. Do not sleep on this. This was something we've been talking about for months if you've been following along. Please comment, because the reason I'm going through some of the things that we've looked at in the past is because of your comments. So the more you comment on what you want to see, that's how I create the content. And I've gotten a lot of requests for more educational content, and we're going to start doing a lot more of that, I believe. So here you are with XBI, and you're right here, and you're setting up to break out, and you're setting up to push. 97.19, okay? That's where you're at right now. 97.19, and you're setting up to push and go forward. If you can get through that, we're looking well past triple digits. I thought we might not get there for a year when we started trading it, but you can get up to this 115. I'm getting a lot of requests to start looking at names like this again, VRTX. Okay. I'm not suggesting not to, but we've been bitten by this one so many times. I kind of want a little bit confirmation. You are seeing a little bit of froth come in the market. You saw this bingo run up, but this may be because more people are using their product. They had some really good news, but look at that volume. But I think people are using that product more than they're using something like this. I have to look a little more into it, and anyone that can comment on it, that'd be great. One does long gene sequencing, the other one does short gene sequencing, and you can see how this gap down, and that just happened to gap down at the same exact time that this one started going up. So if you're also looking at that space, and I know I'm throwing a lot out there today, and I'm doing it on purpose because you're at in my opinion, a fundamental shift in the market. We've been saying it for some time. If you've been following along in the newsletter and what we're putting down, all the higher highs. You could start looking at ARKG. I mean, I know that everybody trashes her, but this is a really easy thing to buy and forget about and just watch trade up, pop possibly 20% there and kind of go from there. You could look at something like that. That's very, very doable. But overall, if you don't know what to do, I'm going to tell you that I would be focused on these 3X ETFs because now you don't have company specific risk. Okay. Again, if you've been following along with us, these were the buys that we started: 440, 690, 10. You can go back old videos. It's all time stamped, so you can follow along. But if you take a look down here, we took a shot because we had these two little tweezers. I'll blow that up a little bit. And I just said, we undercut and then we already reversed. If we flip, let's just give it a shot and let's start a position. And we did, and then it rebuilt, got to somewhere at 6. And then we've just been playing with it ever since. But something like this is just getting started. And I think by the end of the year, you could be up to here. And now you don't have company-specific risk, right? You don't know if you're going to be in the one that blows up or the one that goes higher. So this kind of gets rid of that. Also, in regards to the market, you can do the same exact thing. TQQ, this is something we got in a little earlier. And what you're seeing right now is you're seeing how you pulled all the way back and then just ran again, and now look at where you're closing. Well, if the indexes are going to run, the 3X indexes are definitely going to run. Now, I know people don't know I don't like these short squeeze ideas. I like this. This was presented in the room today by one of the traders, and I laughed because when I looked at it, I'm like, wow, that looks really, really good. I tend to stay away from the smaller names, but I really like this particular volume pattern, and I should probably do an educational video on that. And as I said, I'm going to do more educational videos now. So comment on what kind of educational videos you want to see. But you see how you popped out of here, then you came back all the way back down. I like when you have this and you see the deterioration of selling pressure. And then you see the rise, right? You see our rise here. I like that a lot. So this could be setting up for another gap up on Monday. I would watch this 1334 level and I would go from there. But I would definitely keep my eye on this. It's definitely one to It's definitely one to watch, that's for sure. So keep that in mind. But I don't really play with these, but some of these actually look like they're going to push. Another one that I was looking at was this RKLB. Just look at this volume. And look at how this volume's accelerating after earnings. So these people, if people were short, they're trapped. I'm not so sure that's what's going on here. I think you're seeing buying based upon the story that was not as bad as they thought. Now, one of the things I did with this particular name today that I thought was so fascinating was look at that gap that you have in the space. So you could actually push to like 750, 780 very easily on your position and get up and in and then move your stop so that you're not playing around with it a little bit later, right? So, sometimes that seems like a good idea, I would think, to try to move your stop up just to protect your capital. So something like that, just watch these levels. If I had to choose between the two of them, I try not to laugh, but I don't know if they're running it in one of the Reddit rooms or what they're doing, but they did come out with some cost cutting stuff today. So I would suggest watching that one on Monday. I definitely think it's going to be one to take a look at, one to watch. Out of 10 ideas that I would give you for next week, I'm just going to throw this out there again. This was one we've been talking about since about $10. You can see the levels. And I really want to just hammer this home with SRG. They paid down their long-term debt, a huge chunk of it on earnings, okay? They came out with earnings a little earlier. They're selling the company, or they're going to sell the assets. And as they continue to sell the assets, they're going to increase the book value liquidity, right? So the book value right now is, I think, 17 3/4. So if this dips, and you can use these levels right here on the side as areas that I think are support levels, to add to it. So I would just put this on your radar if you're looking for something that is just a little bit different and you're just trying to get rid of a little bit of the noise. But overall, this market looks really very good, and it does look like we're going to push higher. Even leaders in other sectors are grabbing my attention. Let's just take a look at this for a minute, move this other data over. Look at how you held that level right here, 143.55. Look how you're setting up to push to break out. Here's 132.34, and you can just kind of see right here, and you can see this level right here, 125. So this is definitely something to watch right there, right? So just watch that, and then you'll see how you go, and then you'll see if you push and how that plays itself out. So I like that close too. I really like that close. Like when you close above everything on a hammer right off a 10-day, you might just see this push. And again, you're just going to be looking for like gap fills and seeing if you're going to get there with it. So, right, clear 146 and it's on. You're looking at 158 and start working your way up the ladder. So I would not sleep on this, and I certainly wouldn't be sleeping on large caps, because if I was a fund, I'd want to be buying large caps, right? I want to be able to get my liquidity. We can look at the BBBYs for trades, but you really can't stay in that for months, right? You can kind of stay in the Amazons and the Apples for months, and building positions. If you've been following the newsletter, I think it's been out for over a year and a half now. One of the things about it is this is one of the longest times that we've had the most longs on, because we were depressed and we were able to build positions. The whole market was like that, right? So as we were down, you were actually able to start building the whole way. So when this happens, you're already positioned for it. You're not chasing like everybody else. You're selling into everybody else. So while we have this up, we should start doing the indexes. And you can see this level right here. This is pure, utter, unadulterated bonk level, we refer to it. Bonk, bonk, bonk. Why this level scared me and didn't scare me so much today is every time here, gap down, here, gap down, here, gap down. So I always look for patterns. It's just how I trade. If it doesn't work for you, don't do it. But when I see something like that, that means that they're running it up to knock us down. Why I liked this and why this was different was they knocked us down, right? And then bid us up. Okay, so I just want to make sure you understand that differentiation. If you look over here, the leading bar of the move at this 330 line was what? Was a green bar, and then followed by a downward red, right? All your hopes and dreams, and then they're smashed 3 times in a row, right? We're back, we're not back, right? So here you are. Now you go over here and you take a look, and you can see pretty clearly we hit and then we reversed. Some people will be like, well, I don't really look at things like that. That's up to you. Look at what works for you. This works for me, and I can only share what works for me. So if you look at something like that, and then you start looking at these lines and going, well, we tried the once and now we closed over it. Well, how many times have we closed over it? And for that, we're going to have to drill down into the hourly. And you go take a look at this hourly. 1, 2, 3. Okay? And then you're here again. And then you're pushing. So I think that's really important. It's hard to see there, but you can kind of get what I'm saying. Now you're back over, and you're completely over that level. And that's really very important for us to grasp, because they're the kinds of names that you really want to be looking at. You really want to be looking at those kinds of levels so that you can utilize them and make more macro decisions. We were talking about this. I never got so much bearish sentiment. I should have known we were going to break, is when I simply pointed at this trend line on Twitter. And I said, if you take a look at this, you can see how we're doing, right? You can kind of see that we're trying to hang in here. And then when we broke that out, I pointed out, hey, we haven't done that since April. Well, if you equate these out, every short-term top we've had in the S&P, right? We can go through them. Here's April 4th. We've done this before. January 4th, right? November 4th. If you start looking at those dates, right, you'll kind of see, this is actually August 4th. Isn't that interesting? So here you broke down, finally you're back. So now you're out of equities, you're out of this downtrend, and you're rolling. If you're ever looking for clips, you may want to consider following us on Instagram. So I do post a lot of clips on Instagram and also reels and stories so that you can kind of keep up during the day on what's going on. I find posting videos there just a little easier than Twitter. We do a lot on Twitter, but I'm just finding a lot more. It's becoming a little easier on Instagram. I think it's just their format. Anyway, so you see how you broke down here. Just pay attention to that. I also put the shorts on. There's a clips channel that you can follow there as well. And I put clips on there. And that link is in the description. So now we have the VIX, we have the Qs. Let's look at the SPY. Okay, so this is what we're doing. Now let's just kind of see where you're at in regards to this, to anchored VWAP from the peak. So the biggest move the SPY's ever had, right? The most powerful moves are here, but the biggest move we've ever had is here, over, right? And now look at us. So this is going to get very interesting very quickly, because you got there a lot faster than I anticipated us getting there. And I think it's really important to spend more time on the macro, because it's still been one big trade, right? Earnings are being rewarded. Remember this, earnings are being rewarded, but they're only going to be driven by the indexes right now, because we've all become like economists, worrying about CPI, PPI, what's the PCE, what are rents down, right? So understanding where we are in the pecking order of what we need to follow allows us to make better decisions. 432.80, just watch how you get to that level, see how you act on it. And I would also just focus on IWM. And this is one where, we really have not been above this for very long. This is an emphatic close to me. I mean, right over it, over 200. So I think this pushes. TNA is a great way to trade this. Here's the caveat with all this. We had no volume today. Okay, you had very light volume. So it's not like you were knocking the cover off the ball with volume on any of these moves. And you kind of have to take that into account, right? Maybe not so much on the down days, but on those days you do. And I want to leave you with this one final thought here. So just watch this and watch the 10-year and see if it's going to roll back over, okay? If it does roll back over, I think we're in great shape. Now, if you start taking out 3%, you start seeing inflation kick up again, we might have problems. But I'm leaning towards that these higher highs, it's going to take a lot to get us back down here. Like there's going to take like a big event to get us back down here. You can actually go sideways for a while in the market and just trade. You don't have to just constantly implode. And it seems to me like we got a little ahead of ourselves. But just watch the 10-year for that read. And also just watch the VIX if the VIX starts getting over 20. So if you are interested in the trading room and want to preview it, there's a link to it right here in the top right corner. You can take a look at it and go from there, and have a great week. And try to keep an open mind with this week. I know I'm going to leave you with this. I know a lot of people are looking at this week and saying, oh, well, we're just going to reject again. I'm not saying not to have a bias. I'm just saying that I always have a bias, right? We're human. We always have a bias. But to understand that you have that bias, figure out when you're going to be wrong with that bias, if that makes sense. That's it. That's my rant. All right, everyone. Have a great weekend.